Hello everyone. Today is the 26th of May, so time for another market weather bulletin. Since it's Monday, is the perfect day to prepare our plans to trade Bitcoin during the coming week. Today is bank holiday in the States, so market will be closed. So probably most of the action for swing trade will come tomorrow, but maybe we can find some scalp trade also for today. Before moving to the chart, big shout out to Zumex that is sponsoring us. Make sure you trade with me on Zumex. You will find the referral link in the description below. And then I will explain about a super cool campaign we are running right now. Subscribe to the channel, leave a comment and a like. So we are ready to move and to check some chart. So Bitcoin has been pretty strong lately. As you definitely know, we have been breaking all-time high just a few days ago, and now we are trading somehow around just below price discovery. So the key level of 109 was broken just three days ago. We got a little dip, and now we are hovering around that level. So a lot of volatility and a lot of interest and interesting level to monitor. On the daily, what I see as very interesting level is the 106K level, mainly because, as you can see, historically, we never close a daily candle above it, and it was, let's say, a very important resistance level. So we start to map some of this level. So this is previous all-time high, and this is 106 that we say was an important resistance, and now potentially could become support level. So we have to form our bias, and we do have, as always, two concepts to form our bias. One is the trend, and it's clearly a very uptrend. After breaking this downtrend, we have been up only for a pretty long time, basically since the beginning of April, so almost 2 months, 1 month and a half. The range is giving us a little bit of different perspective because, as you know, the range we have been monitoring all this time, all this month, this one, and we broke above this range, and we are trading above resistance that we can visualize here with the 106K level. So as long as we don't officially deviate back inside this range, there is not much argument for bearish bias because, as we say, the trend is clearly uptrending. So we want to go with the trend, and the range was so far. So we don't know what will happen in the past, but we look objectively of what's happening now. The range that we had was a range like this. We range inside, we deviated below, we had some manipulation below, we came back in the range, we broke it, and now we are officially retested. So this is more or less the price action we have in front of us. So you can see it like this. We did got this manipulation below, price went straight above, kind of retesting and moving. So now we have to map level in order to help to make trade plan according to this bias that is high time frame bullishly, with the caveat of this range high that is flipped and is holding, and we have to set some boundaries on when this bias can be invalidated. So the first thing I would do, as always, is to try to be objective on this range, and I will take with the volume profile all the price action we had since we started to range here at around 90, 82K or whatever. Could also start a little bit more here. And since the range was broken, so I'm taking basically all this price action we have here as a volume profile to have an objective view of where the boundaries of this range that was broken here are. And we get, let's say, some, of course, support here that we will call you value area low. Not super relevant at this moment, but might become relevant should we deviate back inside the range. We do have, in this case, this is important because this range was very relevant, so we always have to map it. as long as we don't break above and fly above, this range is still very close, so it's very relative. And then value area I, that is more or less the 106K. So no need to double. And this is reinforcing the relevance of this 106K level that I was mentioning before. Value area I. That is the level that was never closed since the breakout above. So we say no many bearish argument as long as we don't break inside here. And also, as everything in trading, we should not be dogmatic or super precise. So not as soon as one little candle come here that we say, okay, fuck it, this is a deviation. We are in a bear market and we will go straight to zero. We take step by step. So we have several confluence around this level, and we will try to make some more confluence on the way to map further level. We check a little bit on the daily if there is matter of concern on the momentum indicator. As you know, I usually use RSI and the awesome oscillator, these two, and there is not much to note. Here the RSI is still okay. You see we are printing higher highs, and also RSI is printing higher highs. There is a small matter of concern here, as you can see, that we printed higher highs in the daily price, but not in the awesome oscillator. But I will not say that this is a dramatic bearish divergence, especially considering the strength. We move further down to the 12 hours to see a little bit and to try to tell a story, and especially to map some liquidity. So all this liquidity has been taken, the job here is done, so we are interested to look the liquidity we have in front of us. And we do have this untapped high that is not that relevant because it's all-time high, so it's not really a resistance. So this is an important liquidity level. And then we have two important areas that are these two, that are sort of poor lows that have been built on the way up without being taken out. I just recorded a video on liquidity that will be published in a few days, so I think you will find it very interesting, especially if you are interested in liquidity. The other block is basically this one here. And as you can see, we move up, never sweeping any of this low. So price has been, let's say, vertically accumulated and moved up. So these are levels that, not for sure, but can, if revisited, can provide some interest because there is liquidity. There is also other two levels of interest, that is this big fair value gap we left here, that I was willing to trade here something like this, but we never get the dip. I was willing to trade something like this, but we never get the dip. So we have these two interesting fair value level that are gap that are not filled. Along with this, we have a sort of order block, even if it's not purely exactly an order block for many reasons, but we do have this consolidation somewhere around here. And we do have this consolidation around here. If you have seen the video on the Learn and Trade with Popeye about order block, you will understand why these are not exactly, let's say, purely order block, because there was not a liquidity component, but still these are consolidation that are interesting because this consolidation has given us the strength to move higher. I'm not marking them super precisely because here my interest is more or less to understand the areas where we can see this level. We also check, then there is a support here down below, but it's so far from the price that now is not relevant. In the 12 hours, the situation is a little bit different, as you will see, comparing to the daily in terms of momentum, because as you can see here, there is a kind of divergence, probably time-wise, no, because we are a little bit, the period is too long, but there is some momentum weakening, both on this and on this. So something to at least be aware, not too long blindly, because there might be a correction. So in an uptrend with a bullish bias, we don't short just because we see some divergency, but it's something we keep in the back of our mind when positioning also long. So here we are mapping all this level, and then we can move to the 4 hour to see a little bit better what is happening here. And as you can see, uptrend, uptrend, uptrend. Now here is interesting to understand what is happening in this little movement we have here. Consider that this price action was a weekend price action. Today is Monday, so we still don't know if there will be a lot of volatility with the market close, or can still continue to be choppy. And this will be interested for the trade idea that I will share on low time frame soon, uh, later in the video. So here we get few confluence. We can also check for the EMAs to see if we get some confluence. So I didn't have this prepared. Let's make a 200 EMA that is showing something like this, and you can see the 4 hour EMA is picking up somewhere here, and you will see that the 1 hour EMA here more or less is what is acting as support on this move. So we know that 1 hour EMA is more or less here, and is what has been working as support all this way, and we know that the 4 hour EMA is picking up on this level here. So on our time frame, we know that our bias is bullish. We know that we are above the range and above this 106K level. So the assumption is that as long as the trend works, we will keep trending higher. So now for me, the interest would be to get a swing long for a further continuation higher. A swing long that would look something like this. Have an uptrend, 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 to have something like this and to continue higher. Why this level for me is a level worth to spend some money to try it? Because there is a confluence. So the confluence is that this would be a still technically, even if we drop a little bit lower, a retest of the flipper resistance. So we know that we have been ranging here, deviating below, trading back here. Now we flip it. If it's a retest and we go, this could be an interesting level. And we do have some confluence around this block that created the break of the all-time high. And as long, to me, as long as this area hold, I would not call this officially a deviation. For me, this will be a deviation the moment we break probably structure and we start to move lower. So for this reason, as long as this level hold, it makes sense to look it for a possible long position to move higher. Why? Because if this level is invalidated, we do have two components that will change, I would say, importantly, our bias. First is the deviation. So if we lose down here and start to find acceptance below, we lose, let's say, the fact that this is the flip and retest of a bearish divergence. We will trap here a lot of late longs that will stay here forever and will be punish out with the first, the deviation back inside the range, and second, with the breaking structure. So the structure will be broken, probably the price will do something like this and to move longer. Then I'm not here to say what will happen after and after, but once we see a deviation and a market structure break, and we know that there is long position trap above here, this small move could end up being a bull trap or whatever it is, and then the situation will change dramatically on our bias. But as long as this is holding, we do have reason to expect, not to be sure, or to try to put some money in the belief that this range has been holding for so long, this trend has been holding for so long, this is a relevant resistance level, it's been flipped, so we are not calling a bull trap until there is reason to call a bull trap, but we just call it what it is. That is an uptrend, this is a breakout, and this is a retest of a breakout level. What is the point that is complicating all this analysis is the fact that I explained that there is this poor lossly here unswept that complicate a little bit the way I would like to trade this. So here, ideally, the way I would like to trade this is to draw some Fibonacci, to take this small move. This Fibonacci can be taken here, or if you want to be aggressive, be taken here and look for an entry somewhere here. The entry would look something like this. The stop loss in this case will be somewhere around the end of this level or down below here. And the take profit we will see later, it can be calculated with the Fibonacci extension. What is the problem? Is that from a liquidity standpoint, we might become the liquidity because we know that here is full of liquidity with this poor loss. So this trade setup is good because probably if you get just a small dip and we continue higher, we are not front run, so we enter the trade. But if price have a liquidity hunt, a liquidation event, a liquidation cascade, it can easily wick down here and start to move higher. So I see just two way to trade this. And the first one is to have two orders that will average down our entry. And this, let's say, is a relaxed swing trade. Sorry, fighting with. And this relaxed swing entry will be something that looks like this. And why it would be relaxed? Because in this case, we have two orders, one at the beginning of this block, one at the value area I that we say is important at the beginning of this block that created the last move. So in case the dip is small and we move higher, we are filled and we are safe, and then we can move stop to break even or whatever. But in case here there is some strange movement, and if these are limit orders, we know that can be filled, but we can immediately be stopped out if the wick is very strong. If there is a further drop, we are filled completely on the trade lower, and we are protected for a possibly weak down at this level. So you can also imagine something like this, that you feel half more or less of this week, and in this case, you will average down your entry, and you will be more protected for a drop. So to give you a number, you would average down your entry 7 to 8% from current price, and your stop loss would be 12% from the current level. Can Bitcoin drop more than 12%? Yes, for sure. Can the stop loss be taken? Yes, but you have some margin here of error that if is a strong trend, you are safe. We go back and we try not to contradict ourselves. As we said, this can end up being a deviation and the price come down and go down here, blah, 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 blah. Yes, it's true. So the only reason these two trades make sense is to protect ourselves from a week. Can be a week on the daily or in the 12 hours, so a strong liquidation event. But if the price start to chop around here, all these stages would not be just would fail because would not just be a liquidity hunt of this stop loss, but would be a breakdown in this range and then a potentially breakdown lower. So in terms of limit orders, this is the only setup that I can see making sense. And this with two orders along this order block with some flexibility to for the price to go lower, especially because of this liquidity. And in case you want to take this trade setup, make sure to do it with me on ZoomX. You will find the referral link in the description below, even because you can get a super cool cashback that will match any amount you deposit as a first deposit. up to $100,000. So to give you an example, if you deposit before the 2 of June and is your first deposit ever, 5K, you will be able to trade and to take this trade that I'm mentioning with 10K. So you were basically doubling your trading arsenal. This 5K is funds to use for trading, not to withdraw. If you lose them, fine. If you make profit on this 5K, the profit is yours. So simple, very simple way to double your trading arsenal. Make sure you check all the rules here below and make sure it's your first deposit ever on Zumex. Zumex is non KYC, so in case you already open an account and you already made a deposit, simply use another email address and make a new account where this will be the first this first deposit. The second possibility of trading this range is to wait for some structure. This let's say this high time frame trade. The structure here to visit this level, should the price visit this level, to have a market structure break and then to look something for continuation. In this case, you will not be able to put orders, limit orders, but you will be able, in case you follow the price, to trade something like this with an invalidation on the low that is created after the market structure break. But again, for any swing trade, for me, the level of interest, the first level of interest for this week is this 106K to 100K, with invalidation down below these poor lows that are potential liquidity cluster to be hunted. So this is what comes from swing positioning. For scalp positioning that I'm looking for today, I already sent an hint on X, but to explain it a little bit further is this range. So the thesis is based on two concepts. Today, market has closed, and usually when market are closed, price action is usually choppy, so you don't have major moves. This is not a rule, a dogma 100%, but this is something that is happening sometimes. We are trading, this is the 106K level, all-time high, or whatever, that this is potentially a support, but also low time frame resistance. So we are trading around this level. This is, in this time frame, a bearish move where we break down. So I can consider this range a valid range. That is the one that is formed on the weekend. Since today is again sort of weekend, I can expect, or I can see, not expecting anything from the market, but I can see this to continue being a trading ground for today until tomorrow at New York Open, and I can get some confluence in case we get a little move further up. As you can see, we are already trading at the golden pocket of this bearish move. We do have here a gap that has been partially filled on this move up, but can be further filled here on the way up. And we do have a supply just here. So the way I can see this to be traded today is either in two ways. First one is a first move here with a wick and a bearish divergence and a move down, or is a market structure break here and back inside this range and then move further down. So the two trade would look something like this. This somewhere here, looking again the price to go down in this range, or a breakdown here will give you an invalidation here and a breakdown here. So why I'm not taking the trade straight away right now? For two reasons. One, I still see supply to be tapped. I still see 0.75 not tapped, and I still see this gap not being filled. So here, the I still see the possibility of moving higher. So I do see to move. Or we go to supply and we short from there, or we wait for further, let's say, some sort of weakness signal that will come in the form of bearish market structure break here and acceptance back in this range. That is this one. So if we market structure break means we are entering back in this range, then I can find my entry in another test and aiming at mid-range and range low. So these are the two possible scalp trades to be taken today is as a short. Shorting here should be done with awareness that the high time frame bias is bullish for all the reasons we said before, but considering this choppy environment, it's not that we are shorting here because we call generational top, but it's just looking for some ranging environment more or less here. And as I said, as a move here, moving down, or with a break of this structure here and a move down here. So high time frame, to recap everything we have saying, high time frame remain bullish, but I can justify longing just here. The area of interest for long is here in a retest of former resistance, this block, and all the concept we explained about this liquidity, while on low time frame, we can see some reason for shorting this previous all-time high with the two setup I'm giving. I will update in case of this position in X, but here you have the full explanation and the full reasoning. Should you want to take any of this trade, make sure to do your own research, and nothing in this video is financial advice, but do it with me with ZoomX using the referral link in the description below and enjoying this super cool campaign. I'll send the chart later on, both in Ox and my Telegram channel, but I hope everything is clear. Should you have any doubt, just drop me a question here below the video and make sure to subscribe, to leave a comment and a like so you will help me to grow the channel. Uh, Hope you enjoyed the video. Stay safe up there, and we'll see you in the next episode. Take care.